G'day, recording this video on Sunday the 22nd of December 2024, just gone 4:40 AM Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. And hell's bells, that was quite a week. We had a massive sell-off on Wednesday, everybody knows about that, Fed announcements, and pretty big bounce on Friday as well. So the question is, where do we go from here? And we'll try and answer that in these charts that I go through. But before getting into the E-mini charts, just to make a couple of points. The first one is the ranges on Wednesday. Absolutely massive. This is my handy dandy range indicator here, which shows us the range during the day session of the E-mini. And we were up at 241.5 points of range on Wednesday. And then on Friday we bounced 150 at 2.5 points of range. These are big readings, and it's unusual, obviously, with that sell-off, but that is super big. And the other thing to highlight is the seasonal patterns. This is the seasonal indicators that you can get from the Emini-Watch website. We are at the beginning of another seasonal pattern. This is the Santa Claus rally, which usually goes from about the 19th of December to the 9th of January, and in general it's bullish because holidays, people are bullish, leads to a little bit of upward movement in the stock market. This indicator on this left-hand chart shows us the seasonal pattern on average year by year, and this is where we were exactly a year ago. You can see, so we're down here, we're leading to this strength, and then you can look at the averages, and I think the seasonal indicator is averaging 25 years of changes day by day and allows us to plot the next 3 days on average based on what's happened in the past, and they're showing that bullishness there. But the seasonal pattern runs for quite a while. It's the 19th of December to the 9th of January. And as I go down the charts on the E-mini, I think you'll see that we need to be just cautious in order to play that seasonal pattern out. But anyway, so let's talk about the E-mini on the daily chart first. Here's Wednesday's activity, the sell-off that we had. And we had Rambo patterns a couple of weeks prior into those highs. Into this recent high we also had Rambo patterns on the lower time frame charts, but we are still in an uptrend. The background is in red. We are above the trailing stop on Beta Pro-Am, and the bars are red on Beta Sine Waves. That's just showing us that we've still got strength, so remember that long term. What I'm looking for the top to be marked is blue professional up bars, whether they're at new highs or testing into new highs. That's, for me, is the most important signal. So here, the last time we saw blue professional bars, they were on the retrace, on the dip. They were buying that dip, and then we trail up the stop, and we haven't seen that yet on a daily chart. So let's see if we get that with this week's activity. Here we go. On Beta Sine Wave, we've got a cyclical cross on the daily chart here, and that's allowed us to print a cyclical support just sitting right there, just above that previous resistance level there. So that's important. Go down one time frame, the 135-minute chart. There are the Rambo patterns that we had. Sometimes Rambo patterns means it's a reversal, but sometimes it just leads to weakness. And we had some weakness after these Rambo patterns down here, and this is the weakness that we've had after these Rambo patterns. You can see we talked about the momentum declining over the last several pushes. As the market's making higher highs, momentum is showing us lower highs, and such a divergence pattern there, and it's showing the weakness of that buying at that point right on the zero line, and that led to this sell-off that we had. But it's resulted in exhaustion sell at this point down here. It's a pretty healthy read. It mimics the exhaustion buy pattern that we had into these highs, or getting the move going here. So that's important there. So it's a decent read. It means a lot of people getting out and then allowing a lot of traders to get in at those lows. Blue professional bars, which is good. So the professional is active, and there's our cyclical support here on the intermediate time frame on the 135-minute chart. 45-minute chart, and here you can see the backgrounds in blue. This is on this chart showing us the average trade size is super high, and it's actually showing these blue professional bars on that time frame in the lower time frame. So we know this is really important. We've got an exhaustion sell pattern down here. The background's in grey. It gets overwritten with the big pro bars here, but there's the beginning of that background in grey, which means we're below support at the trailing stop on Beta Pro-Am, and Beta Sine Wave, the bars are white, showing us that we're in a downtrend here. But we've got cyclical support in due at some point, the highest time frame here. And because we've had that exhaustion sell pattern at that point there, we are looking for a test down to get a bullish divergence pattern on the 45-minute chart. But everything needs to come together. We need this cyclical pattern to come together. We need to start breaking above resistances into uptrends, and this needs to be trailed down and broken above on the 45-minute chart. So we don't have enough information there to say that this is turning around yet, but that's good. The exhaustion sell, the big pro bars here, is super important. And here we go on the 15-minute chart. You can see the swan dive that we had through supports up here at 6100, just above it, 6110.11 that we highlighted in last weekend's video. And there we go, exhaustion sell, big pro bars, blue professional bars down here at the lows. But note a couple of things. So first of all, on this chart, the exhaustion sell comes in, which is great, and we've got a bullish divergence pattern, which is also good, but it's on the zero line. So we say when we've got one on the zero line, we wait for the flush pattern. Here's a similar thing. The bullish divergence pattern's close to the zero line. We wait for a flush pattern here. The flush pattern is going to be an exhaustion sell that is pretty severe, but it's not as bad as the exhaustion pattern. So I think we've got that in our future to look forward to. Some pretty scary read on the downside in terms of momentum on the 15-minute chart to put in that flush pattern there. And then when we go to the cyclical patterns here, you can see we've got resistance on the intermediate time frame. Everything's in white. We're still in a downtrend in this time frame. And so we've got to go complete. Now, whether we're going to go up and then come and catch a cyclical turn on the highest time frame here as we go up, and then swan dive down again in order to test those lows, I don't know. Or do we just keep going on Monday through these lows and it just keeps going? The psychology of this, I didn't expect such a big bounce on Friday because the market was down midweek. Now you've got the retail market, the general market, looking at their charts on the weekend. They've got two things going on. First of all, they were scared by Wednesday, thinking, holy heck, that's the end of it. I should have sold a week ago, but now I'm anxiously trying to get out. And then they get a relief rally on Friday, and they're thinking, well, maybe it's not as bad as I thought. And they've also got this seasonal bullishness. Everybody's feeling good about Christmas, and so they're conflicted. It would have been easier if it was a straight sell-off on Wednesday that then continued down with even more bad news on Friday in terms of movements down. And then they'd be very scared on the weekend, thinking, okay, Monday I'm just selling it all thing. And so you'd expect Monday just a big sell-off day driven by the retail market, who are just looking at their charts on the weekend. So, I don't know, Monday's going to be interesting. Tip bar chart, 13,500 tip bar chart, and here we go. This is where we can really get a sense of it. Last weekend's video I was talking about the killing fields. Let's go back a little bit here. So here we go. These blue professional bars were forcing the market up. They did not happen on the way down. They were not showing here. A proper bottom is made when we have blue professional bars at new lows on the way down. This was, they hit an exhaustion sell pattern. They run out of sellers at that point, but then they grabbed a whole bunch at the close there on that day, and they forced the market up. And then they sold it down here when we tested back up of 6160. Blue professional bars come in, sell it down pretty harshly. And they used all of this activity to get short and short. And we knew that that was going to be troublesome. The level down here, I think at the lows, what we were talking about was 6111, I thought, down here. Yeah, 6110, 6111. We'd bounced off a Rambo pattern here, so that's the amateurs kind of getting wrong-footed at that point, and we had the one blue professional bar at the end of the week. And then the market started to take off above that, but it's these blue professional bars are in the wrong place. We need to see them on the way down, and so this was suspect here at this point. So when the Fed announcement came out, we just dropped through the floor. That 6110 level, 6111 level became key. We dropped through that, and we were just away to the downside. So that's a killing fields pattern, where they force the market up and they're using all of this activity backwards and forwards to take positions, get short, and then we know that they've gotten short because we dropped through that floor pretty decisively. So there we go. We've got exhaustion patterns taking us down through this move. Bang, bang, bang. That's getting the move going there. Now, question is, have we seen enough exhaustion patterns on the downside in blue professional bars? No. We certainly hadn't on Wednesday. So this is Thursday's activity and the testing down and the bounce that we have. So we hadn't seen enough blue professional bars down here and here. That was a nice bullish divergence pattern. We bounced from there, but we needed this. We needed these blue professional down bars to come in. They were happening at new lows below that level there. That's nice. So they were picking up there. All of those Rambo patterns, those were all amateurs getting wrong-footed, and as soon as we cracked the other way, bang, they're in a world of pain. And that was a super strong rally that we had, 150 points, whatever it was, on the Friday. So now we've got blue professional bars into these highs with an exhaustion pattern at the end of the week. So the question is, what's going to happen now? My guess is we're going to see another exhaustion pattern and more blue professional bars. And the reason why I say that is that we've come into cyclical resistance at this point. Big things happen at triples. We got triple resistance, low, intermediate, and highest time frame. Pretty tight together as well, so that's a little confluence that's super tight there. We've got a sign of weakness happening there. It's similar when we have big things happen at triples, sign of weakness. When they come together, that can be a strong signal there. So my guess is we've got to go pull back to end of trend on this highest time frame on the way down, and we'll need to generate some more blue professional down bars down here, testing into that region. Hopefully this 5901 level will hold, and we'll just kind of get back here and bounce from there, but who knows. That's showing that we've got some strength at the moment, but I'm not sure that we've done enough in terms of testing on the way down, and so that's what we might see first thing Monday. So there we go. That's some thoughts on the E-mini. Let us look at the tip bar chart, starting with the Forex charts. We've got a whole bunch of markets turning. Going to look at the highest time frame, a better priam chart for each of these going forward, and this is the euro at the moment. So the euro followed the E-mini down. We had this really unusual activity here, lots of volatility, backwards and forwards, with all these exhaustion buy patterns here, but no blue professional bars at the lows. Bang, bang, bang. That was a gathering pattern, selling it down, bang. But now this is better. Blue professional down bars, exhaustion sell, bullish divergence, broken into an uptrend. So the euro is looking a little bit strong at the moment, which is good. British pound should be similar pattern, but no. A downtrend, backgrounds in grey or black, exhaustion sell, bullish divergence, but no blue professional bars down here at the lows. So this little push up to 26, led by the amateurs, we need to come back down, maybe see some blue professional bars down here testing at 25. Aussie dollar. Now, long Aussie at the moment, and it's not quite going my way at the moment. I'm wondering if it's needing to test down. Here's these big pro bars here into these highs, and we sell off there. That's last weekend. This weekend, swan dive from the beginning of the week, really, and the levels down here are shockingly low. As an Australian, it's 62 versus USD, which is painful in the extreme. Yes, blue professional bars come in here, then exhaustion, sell, bullish divergence come in, another blue professional bar, we stair step up, so that should be a good trade, but we need to get up through 62.8 at that point. This whole thing needs to hold around 62.4, and we need to kind of get going on the Aussie. So let us see if that happens. Japanese yen still heading down, so here's the weakness that we had 2 weeks ago. Blue professional bars selling it down, exhaustion sell through those lows, and we keep going. Yes, big pro bars coming at the end of last week, but they don't hold it, and we just keep on going down. But now this whole pattern is Rambo patterns. This is super low average trade size. It's almost like the only people playing there are amateurs and small volumes. We're still in the downtrend at that point, and we keep on getting these exhaustion buy patterns here that we don't, not matched by exhaustion sell patterns on the low here. So it's interesting. So the Japanese yen is still weak, but we have to wait for a blue professional bar. If we have a retrace, blue professional bar comes in, sell it down, that would be an interesting trade. 10 years. Now, 10 years obviously with the Fed announcement, swan dive down here, sign of weakness. I mean, we've been in a downtrend for 2 weeks. But at these lows, here you can start to see something interesting. Exhaustion sell patterns, big pro bars come in here. That's usually a nice signal for a bounce. And we've got a stair-step trade here. So we have a little bit of strength. No blue professional bars taking profits here, but the blue professional bars stepping on the retrace there. So that's interesting. So that's 10 years potentially changing around, which means what? The bonds are rallying, therefore interest rate expectations are going down. And the Fed announcement was obviously the cut, but what changed in the market sentiment was that instead of 4 cuts next year, the Fed was only seeing 2 cuts. But this is suggesting that the market's saying, well, the Fed might be wrong. We're seeing more cuts in the future because we think the rates are going to go down and therefore the bonds are going to go up. But let's see what happens next week. If that catches and we get a rally in 10-year notes. Gold, here we go. From last week, it wasn't exhaustion buy up here, but big pro bars at this point here, then fell out of bed into a downtrend. And no exhaustion sell on the downside, but we do have blue professional bars testing down in those lows, and so this is flipped around, which is good, but we haven't seen an exhaustion sell pattern there. So let's see if that's a real bottom being made in gold. Silver, exhaustion buy, bearish divergence, flush, big pro bars not at the highs, but taking profits and getting short there, but then a big move down to 29s and here. Exhaustion sell, bullish divergence flush. Professional bars, a whole bunch of them here and here and here. So that's kind of good. Not big pro bars to mimic this pattern here, but that's why we're having a bounce, and that exhaustion buy is getting the move going. So silver's looking good. Bitcoin not yet. So Bitcoin, yep, this week rolled over, headed down. Exhaustion buy, bearish divergence, turns into a downtrend, sign of weakness, bang, 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 on the way down. But you can notice here on these pushes down, no blue professional bars come in, and in fact they've come in on the retrace here. So as soon as we have a little bit of strength, under 100, professionals get in, sell it down. So we're still in a downtrend on Bitcoin. Crude, now, crude, I think something's going to happen in crude in the next few weeks. On the daily charts, on the higher time frame charts, it's just winding up and winding up, waiting for something. My guess is going to bust above 71, but we'll see. These are big pro bars, catching that low and getting the move going, but exhaustion buy, Rambo patterns, rolled over into a Rambo pattern here. There's not a lot going on this tip bar chart, but if you look at the daily charts on this, above 70, 71, it would be interesting if it broke out of that. And I'm not sure what is the catalyst for getting that going, but it's winding up for something. Let's see. Oh, natural gas. Yeah, natural gas bottom this week. Here we go. Big pro bars coming right at the lows at 310. Average trade size super high. I mean, how's that? It's a beautiful pattern. Exhaustion sell, bullish divergence flush down here, breaks into an uptrend, sign of strength, bang, we take off to the upside. So it's a big move this week in natural gas. Then copper. Copper, weak again. Last week topped out, fell into a downtrend. Couple of blue professional bars down here. Exhaustion buy at that point. I don't know, it's not exhaustion sell on the way down here. Not a whole bunch of big pro bars like that at those lows. So let's see what happens with copper this week. And then the ags. The ags started to turn. So here we go. So the high was made, big pro bars, we overshoot it, Rambo patterns, the amateur leading the way, and then they sell it down, big pro bars selling that little bit of strength at that point there, bang, take off to the downside, we test, and then we're down again. So now we've got the reverse. We've got exhaustion sell, bullish divergence, big pro bars coming in here at the lows, and we've rallied from there. No blue professional bars taking profits yet at those points, so let's look for a retrace on corn to get in. And soybeans I thought was going to break to the upside, but it didn't. It broke to the downside, and you can see here last week background was in grey, turned into grey as well, just continued to sell it down and down and down. We knew something big was going to happen to soybeans because it was caught in a range for a while, but no blue professional bars at the lows, and we just bounced into Rambo patterns here, so I think we're going to have to come back down, test into the lows on soybeans. And lastly, wheat. Wheat is trying to bottom. Here we go. Exhaustion sell, bullish divergence, big pro bars, a whole bunch of them come in here at these lows, and it's holding at the moment, but it's not broken into an uptrend yet on wheat. So there we go. Hopefully that video wasn't too long, but a lot to talk about. It's going to get a little bit quiet over Christmas. Christmas Day the markets are shut and things get a little bit quiet, obviously Boxing Day and Christmas Eve. Monday is going to be important, so let's see what happens then. Hope your trading is going well and looking forward to next week's trade.